Tom Lee just came out and revealed his top 9 stock picks and sectors going into the rest of 2025. These are picks that you absolutely cannot miss, ladies and gentlemen. And with all of the volatility that we're seeing in markets, the aggressiveness of the sell-offs that we are seeing, for those of you guys that have a more mid to longer term view on the markets, on investing, and for your own personal accounts, these are the times in the markets where you want to be able to take advantage. So in this video here, we're going to be breaking down not only just saying what the picks are, but actually outlining why Tom Lee is saying that these are the stocks to buy. Now, again, you might agree with some of them, you might not, but again, me just coming out and saying, oh, here are the picks, figure it out for yourself, is not a very really efficient use of our time, and you're not going to learn anything that way. And I think that's a lot of what happens on a lot of these videos on YouTube. So if you guys like this in-depth, no BS, no nonsense approach, make sure you guys drop a like down below, and make sure you guys are subscribed too. We are trying to hit 100,000 subscribers here, and turn on notifications so you never miss another video like this. But again, without further ado, let's roll that clip.
I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Rieder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high, because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
So what would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla, because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this bounce, that's a bull case for Mag 7 to be the group to own in the next few months.
So you like Mag 7, even though we've been talking about things like cash burn at Microsoft and all of the CapEx investments and worries about a bubble in AI spending?
Yeah, I mean, in some ways, it's been a self-amplifying downturn, right? Because we've been worried about AI as a bubble and the CoreWeave IPO at a time when we have tariff uncertainty. So I could see it as a very convenient reason why investors have actually avoided Mag 7, and it's been the group that kind of really led the downturn. But it is a cyclical trade too, because I think once investor confidence returns and they're going to start to buy stocks, the Mag 7 are not only the best companies, but they're the most liquid, and they've really derated. On top of that, I think financials and industrials look attractive as well.
So you guys heard it there directly from Tom Lee. He really likes Mag 7 and also financials and industrials. And we're going to be breaking those down as well as all of the other Mag 7. And in addition, we also got a little bit more of an insight into Tom Lee's macro view. Now, I know the macro picture can be a little bit confusing to people, but it is the most important thing that you have to understand if you want to have any success in this market over any time horizon. So first, we're going to cover a little bit of the macro here, and then we're going to get into all of these individual picks. So moving over here first, again, we have a very, very steep decline here in the expectations for Q1 GDP growth. If the economy is not growing and is actually expected to decline, well, in the short term, that's obviously going to be very, very, very difficult for stocks to trend higher in that type of environment when the economy is shrinking. The other thing that Tom Lee mentioned here was sentiment. So we did recently on Friday get Michigan's consumer sentiment data, and to no surprise, it was a little bit lower than expected. The prior was 57.9, the survey was 57.9, but the actual number came out a little bit lower at 57.0. Now, when we come over here and we actually take a look at the trend of consumer sentiment here, since really December, it has fallen off a cliff. And that is what Tom Lee is talking about when he says sentiment has already dropped off. And if it drops down enough, that can be a contrarian buy signal, because a lot of the market and a lot of investors are going to overreact all of the time. Just think about all of the times in the past where I've been able to outline for you guys the tops and bottoms in the bond market. That is exactly how I am doing it. I am looking for when the market is overcooking expectations and things are getting a little bit too over their skis. Are they projecting too many rate cuts? Are they projecting too few rate cuts, or even too many hikes? Understanding how to read those things, guys, is incredibly important, and we are getting that point to that point with consumer sentiment data. Now, moving back over here, we also have to briefly talk about their inflation expectations. So now, we've talked about that chart before a lot, where you break down inflation expectations by political party, and you do see the Democrats projecting a very significant increase to inflation this year. It's around 6.5%. You see the Republicans saying about 0.1%, and the independents are somewhere in the middle, but averaged out, those one-year inflation expectations are going to show up around 5%. Is that realistic? Absolutely not. But in this type of environment here, guys, when we are getting towards this April 2nd deadline, we have to think about what happens next. After whatever tariffs are put into effect, are finalized, we then have to look forward as to what's next in the market. Are we going to see these effects of inflation? And if we don't, what is likely to happen next? And if that is the type of situation that we get into where inflation does not spike to the upside there, well, we're still in a situation with lowering growth, increased unemployment, and low inflation, which would lead to a situation where we would then have to see interest rates move down by more than what the market is currently expecting. So let's get into some of these picks here, guys, that Tom Lee is outlining, and just kind of go over some of my thoughts, the relevant news, and how the charts look, so that you guys have a better understanding going into this next week's trading week and deciding whether or not these are picks that you want to add to or even initiate in your long-term portfolios here. So Tesla. Now, what I will say about Tesla right now is that Tesla is not looking bad at all, ladies and gentlemen. When we take a look at this chart here, again, even though, again, I'm recording this a little bit before market close on Friday, Tesla's down about 3.5% here, but this overall setup is looking pretty bullish. If we are able to break to the upside here right around 292 and break this 200 exponential moving average on the daily time frame, we could easily see Tesla push to the upside here and potentially get all the way up to that 367 area within a matter of a month or two there. Now, I know a lot of you guys are going to think a lot more big picture and a lot broader than that. And again, that overall sentiment shift excuse me, that you've seen towards Tesla due to Elon Musk's involvement in Doge can easily be an overreaction by the market selling off Tesla here. Now, again, Tesla does have their delivery numbers coming out this upcoming week, but when you take a look at this information over here, Tesla China registrations bump offers investors hope for vehicle deliveries. Tesla vehicle insurance registrations in China made up ground sequentially last week, marking the company's highest weekly total of 2025. So that is a little bit of good news here coming into Tesla's deliveries. Even though they may not be great, they might be a little bit better than what the market is already expecting, providing an opportunity for Tesla to get a little bit of a short-term bump. And then let's talk about the next one here. Everybody's, I think most people's favorite stock from 2024, Nvidia. I will tell you guys right now, this chart right now is not one that I would want to buy at all for a couple of reasons. Just looking at the structure of this chart here. And again, this is why I go through the videos this way with you guys. Again, I want to make sure that you guys are actually just not saying, oh, Tom Lee says buy, we're just going to go out and buy. You have to take in all the available information and say, okay, what is likely to happen next, and how does everything look in the short term, as well as going into the future. I actually don't really like the idea of dollar cost averaging unless it's already on a predetermined plan. If you are the one that's going out and saying, oh, I'm dollar cost averaging, I think that's a very, very, very dangerous game to be playing in the market. Again, for those of you guys that might have misunderstood that, dollar cost averaging is good if it's on a predetermined plan where it's automatically going to go purchase stocks or ETFs that you like. But if you're the one out there saying, I'm the one dollar cost averaging, it's just you going out buying the dip, potentially catching falling knives. Nvidia has had two tests right here at this 200 exponential moving average and has rejected. And when you come over here and take a look at the VanEck semiconductor ETF, you are getting down to some very, very, very dangerous levels here. And the semiconductor space has not been doing very well. And then shout out to one of the members of my private community sending me this. Again, you guys want to join VIX Insights there? It's literally only $10 a month. You guys are going to get all of the professional level market research reports. Again, guys, you might not know this about me, but I'm 25. I've been learning about how to analyze markets and read them and invest and trade from some of the most successful financial professionals in the world since I was 14 years old. You guys are going to get those professional level market research reports, the weekly Q&A calls where we're going to be covering not only the broad market, but also your favorite individual stocks. You guys are going to get the single stock research reports. Again, over the last basically year and a half here, I gave out Palantir at 15, SoFi at 655, Philip Morris at 95, Yin at 20, Robinhood in the teens. Again, the list goes on and on, guys. If you guys are interested in joining in there and joining the journey, make sure you guys check out that link down below and hop into VIX Insights with us. But this message right here is very interesting. Slowdown coming in global semiconductor sales. The Philadelphia Stock Exchange Semiconductor Index, again, has been moving aggressively to the downside there in the world semiconductor sales, lagging by about 6 months here. And as you can see, there's a pretty positive correlation here to these indexes and then also semiconductor sales that is probably not going to be very good for a company like Nvidia. So now let's move on to the next Mag 7 name, and this is Facebook. Now, this is actually one of my largest holdings here right now. I think it's actually number one, even after this nice drawdown that it's had. I mean, I don't want to say it's a nice drawdown, but again, we've seen a little bit of a pullback from the highs. Can't really complain though. I mean, it's at the same levels that it was going into 2025 here. So again, when you come into the market every single year, guys, especially if you guys are new to the market, not every year is like last year. I think a lot of people are a little bit spoiled with the gains that they witnessed in their portfolios last year. And there are periods like we are witnessing right now where we do see increased volatility, trading in ranges and deep sell-offs. But again, if you are operating from that longer term perspective, there's really nothing to worry about. Again, especially for me, you guys know I'm 25. I'm going to be 26 in a couple months here, but I'm not really planning on using this money anytime soon. So any of these dips, any of this volatility there, I really just use for tactical buying opportunities if they make sense. And I'm really focused in on that longer term vision there. But when we take a look at Facebook here, we are seeing this really solid respect of this red line here, this daily 200 exponential moving average. It is held off so far. It would be nice to see this continue to hold this area. And then again, as you guys all know, Facebook does operate in the AI and LLM space as well, and they recently were able to celebrate 1 billion downloads of Llama, which is definitely a significant achievement here. Again, seeing these LLMs continuing to grow, seeing the use cases, again, there are obviously going to be winners and losers here, and a lot of these Mag 7 companies are going to need to show a significant return on investment for all of this money that they are pouring into a lot of these chips from Nvidia. But again, that kind of ROI in that kind of scenario where they could start backing off a lot of that CapEx spending might show up in this quarter, but really we are a couple of quarters away from that really becoming a big problem if that is going to occur. And then let's move on to the next one here, guys. This is going to be a little bit of a quick one here as we get through a couple of the rest of them, because I really do want to talk about the financials and industrials sectors as well with you guys. Google, not really one that I would want to be interested in purchasing here. This looks like a falling knife. Remember, guys, in that three-pillared approach to how I get these really solid risk-reward entries on a lot of those mid to longer term investments, I need to look for a solid base. I'm not just going to go out there and start buying a stock just because it's down. I need to make sure or have a good understanding of, okay, this is the highest probability base, and the stock price is most likely not going to head any lower from there. Again, there's always that potential for that V-shaped recovery, but that is not something that I am out there trying to catch here. This aggressive move down in Google here, again, I would wait for this, give it a little bit of time. Again, though, nothing I say in these videos is financial advice. You guys can do whatever you want with your money, but this is not one that I would be touching at this current time. Moving on to the next one here too, we have Microsoft. So again, this chart right here is really not one that I would want to buy. It would be interesting, however, though, if we could hold this 377 area here. You do have a nice range of support that you're kind of bouncing off of right from the end of 2023 here, which is, again, very interesting. Even after all of the big booms that we saw during the year 2024, Microsoft is really right back where it was at the end of 2023 and the beginning of 2024. So again, not one that I would want to be going into right now, but again, it's your money. You can do whatever you want with it. However, we do have some pretty interesting news that came out recently that Microsoft Mole's developing its own high-end generative AI, says the CEO Nadella. Microsoft is considering the development of its own high-performance artificial intelligence platform model. While the tech giant has been using the technology of ChatGPT, a generative AI developed by OpenAI, having its proprietary platform will make it easier to provide services optimized for its business software. And this, guys, is one of the ways where eventually a couple of quarters, maybe even a couple of years down the road, where we're going to be able to see some of those big returns on investment from AI if they are going to happen. Again, those have still yet to be seen, what types of returns that these big corporations are able to get on all of this money that they are pouring into this research, development, and overall CapEx spending in the AI space. Now, next up on our list of Mag 7 stocks, guys, we are going to be talking about Apple. Apple did have a really nice setup going into Friday's trading day there, but again, was just dragged down by the broad market, selling off aggressively. Right now, I would give Apple a little bit of time to breathe here, but it isn't at the worst spot in the world if it can reclaim this daily 10 exponential moving average and start to make that attempt over this 200 exponential moving average here. Now, the main thing that we have to think about with Apple in the long run here, guys, is they need to do some innovation. They really haven't released a flagship, groundbreaking new product in a very long period of time. And when we come over and take a look at this article that was released here, I almost kind of laugh at this. Apple's most profitable product, the iPhone, could finally be getting a much needed change. When we scroll up here, Apple needs a new reason to get you buy an iPhone. It may have one. The tech giant is soon expected to make its biggest bet in years, introducing a significantly slimmer iPhone to hopefully reinvigorate interest in its biggest revenue driver. Guys, I really don't think the fact that the iPhone is a little smaller or slimmer is really going to increase sales there. So, again, I think Apple has some work to do there. But again, still a very, very, very solid blue chip company for the long term. Just not something that I would personally be interested in taking on a position in at this current time. And again, last one up on the list of Mag 7 names here before we get into what I think to be the most important part of this video here, where we talked about the financials in the industrial sector. We're going to be looking at Amazon here. Again, not necessarily a really, really enticing chart here for me. You did see that attempt over the 200 EMA. It could not hold. You're back down to those lows. I could easily see some more downside here, and I think you guys are seeing a theme with a lot of these big Mag 7 names, in that they are really going to be driven by overall market kind of movements there. Again, if we can get through this kind of new this trade deadline and this new trade policy, we could easily see the market kind of pick back steam up a little bit here. Again, we did see in the after hours on Friday, which is right now where I'm recording this video here for you guys, Trump did say he's open to negotiations on tariffs. That could provide for a little bit of a breather going into this next week's trading week, but we will see. So getting into this conversation around financials, big banks or regional banks, community banks, I want to briefly just touch on kind of the chart of XLF here. This is held up a little bit better than the broad market here, but the story with the financial sector isn't necessarily having to do as much with the broad macroeconomic situation that we are in right now, as it does some of the new developments that we could see out of the new Treasury and this new administration. When we take a look over here, during an interview for the All In podcast, Treasury Secretary Scott Bessent said that the Trump administration is re-examining all bank regulation with a focus on easing the burden for banks. Although he singled out the supplementary leverage ratio as one regulation that could be eliminated, Bessent said that regulators are incentivized to keep tightening the corset without regard to growth or common sense. He noted that bank regulation is primarily handled by the Federal Reserve, Office of the Comptroller of the Currency, and the FDIC. Only the OCC, the Office of the Comptroller of the Currency, is part of the Treasury Department. However, as Treasury Secretary, Bessent is chairman of the Financial Stability Oversight Council, which has representatives from all three agencies. I plan to just keep pushing for safe, sound, and smart deregulation. So, if they're going to put a little bit of the focus there on some of the community banks or maybe even some of the regional banks, you could see something like KRE here start moving to the upside as we start to see kind of phase 2 and phase 3 of a lot of this new administration's plans come into effect. So financials is definitely going to be something that you guys all need to keep on your radar going into the end of this year and honestly the rest of this second Trump administration. Now, I know this has been a long video, guys, but we just have one more thing to go through in this one here, and that is industrials, which Tom Lee was talking about towards the end of that clip there. Again, selling off pretty significantly there, but what I would bring your guys' attention to is, again, a lot of these different companies in the industrial sector are doing a lot of the manufacturing for a lot of the U.S. goods and services. So, if the Trump administration actually plans to bring a lot of this manufacturing back to the United States, well, some of these corporations could be big beneficiaries of that type of movement here. GE Verona and 4 more stocks for an American manufacturing renaissance. The changes now being wrought will lead to more factories and require more power, automation, and artificial intelligence to run them. So what you really have to think about here, guys, and in total, when we really look at what's been happening in the beginning of this year, is this is really just phase 1. There are obviously going to be sectors and companies that are going to be big winners due to what this Trump administration wants to do. Is it going to be all of the Mag 7 names? Well, if the market in general is going to trend to the upside, like Tom Lee thinks is going to happen, again, I'm a little bit more on that cautiously optimistic side that, again, we are going to see a lot of the short-term volatility, but if a lot of these deals do end up coming to fruition with these tariffs and this trade war, then again, we could see a short-term bounce in the market. But what I'm more thinking about here, and what I think a lot of you guys should be thinking about, is what happens in phase 2 when they really start to either ramp up U.S. manufacturing or really start to get into the deregulation of the banking sector, because they're going to have to somehow stimulate other growth in other areas of the economy if they aren't going to be recklessly spending as all of the prior administrations have done before them. So that's really what we need to be focused in on. Again, if you want to just go out, buy tech, buy Mag 7, again, you can do that if you want to, but those charts aren't really looking so good in the present, and there's definitely other opportunities to be had. So guys, that is going to wrap up this long video here. If you guys did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. If you guys do want to see more videos like this, make sure you guys are subscribed and turn on notifications so you're notified every single time these videos go live. But until next time, guys, I will see you. Peace.